I went in there today and someone was there and I sent a message. I don't know if they got it or not, but it's kind of a ghost town anyways. The recording has started on the on. Actually, let me get my screen share going. I'll be glad when we're only doing one platform. I can tell you that. And share. Let's get back to this. Got it. Okay, good evening, everybody. I told you there'd be a little bit of friction as we move from Discord to Circle. And so it was pretty smooth at first, but a little bit of friction. We're going to work through it. Welcome out, everyone, to the Market Watch Group working sessions. This is the open session. I need to change it. That's what I'm going to call it, the open session. So everything goes. My name is Scott. I'll be your host. It's a small group, but a good group. PJ's here. Press is here. David, William. Love it. Let's get started. Here's the disclaimers. We are not brokers. We're not advisors. This is for education and illustrative purposes only. We don't give advice or recommendations. Let's go take a look at what's going on. It's a working session. What happened today? Well, the market was down today. Let's go take a look. The futures are down now. 0.3, 0.24 on the Dow, 0.5 on the NASDAQ, 0.3 on the Russell. Okay. I don't know if anyone noticed, but I put in an alert update. If you were in the Walmart trade, I put an order in to close at 90%. At 90%. And that failed yesterday. Let's go back. I'm going to do my trader minute on that. This was the original trade. Got in for $1.18. Let's analyze this position. And wait a second. What is that? I have no idea what that just did. Analyze trade. There we go. Okay, so there's Walmart. The trade was, let me get ready. I got to get my clock ready for this one. Tell me if you took this one. Did anyone end up pulling the trigger on this trade, first of all? Okay, let me see. Thank you. I got an alert. Love it. Learning the ropes is so much better. Press likes it. PJ says a little confused on the new one. Was there Discord here now? Yeah. Understood. Tell me how I can help. Did not take the SPY trade yet as market has been going down. And yeah, that's fine. It is, the trade is down marginally. I'll show you that one too. It's not a directional trade though, right? It's a time spread. So that's fine if that's your rationale, but just be thinking to yourself, you're applying a directional logic to a non-directional trade. This is a delta neutral trade. So I'm not like, this is the perfect time. I'm like, hey, implied volatility is high. Let's put it on and let's sit. Tomorrow, we'll get to that one. Let me get my clock set up for this. I'm going to talk about why I closed this one when I did. I haven't heard yet. I took like 5 or 6 of Glenn and I's videos and I said, all right, it's in the first like 5 to 7 minutes. And in that first 5 to 7 minutes, you'll hear us talk about the Trader's Minute. We'll say, ready, go. And that's when I hit my timer and I wrap up by the end. You did take the Walmart trade. In 11.4, out 11.6, 71% profit. Love it. Love it. I think I ended up over 100%. I think I ended up getting out at like 280. So it made $1.60 on $1.18. So like 130 is where, I mean, I got 90% of max gain. Right? It's a $3 spread. I paid $1.18. So max gain was $1.82. No. Yeah, $1.82. And I got $1 like 60 of it or something. I got a good chunk of it. Yeah. They are not in a hurry to lower rates. You know what? I think they're just kind of putting a thing out there that says we're not going to be, like, oh yeah, now they're going to bully the Fed into lowering rates to be advantageous. I still think they're going to lower in December. We'll talk about that and we'll go look at it. I saw that too. We'll assess it. Let's look at, from a market posture standpoint, what we think about today. How troublesome was it? How concerning is this week? Or is it actually advantageous? Because our general philosophy is find a bull market and buy the dip. And if we believe we found a bull market, then the next thing we should do is buy a dip. And what's it doing? Dipping. Okay, Trader's Minute. Let me get the chart. My ADD is kicking. It's close to the weekend. Yeah, we're going to love what we see here, you guys, I think. I think so. I think it's going to tell us to get ready. Get ready. Walmart. Trader's Minute. Ready, go. Okay, remember the original trade was back here. As we had this pullback, our stochastics turned, we entered, got some good momentum. It just sort of continued. As we got near the end, what's the thought process with a spread trade like this? We're 1 day away from expiration. My thought process is always going to be 80 to 90%. Pigs get fat, hogs get slaughtered. We don't want to be greedy where we're like, oh, I'm looking to get 100%. That's a bad idea. If we can get 90, we used to talk about that as picking up nickels in front of a steamroller. Seems like a good idea until that one time. Put that order in. You can still easily get 80% on this thing. I think you might have missed the 90% window. Either way, profitable trade. We want to be out before earnings and then ready for another go. That's the Trader's Minute. All right. Perfect. Yeah, it worked out. It was a good trade. PJ took some profits early. Boom, boom, in and out. If you wait, let it go. Let's see exactly what the situation would be. In at 118, out at 282. So we left 18 cents on the table. 18 cents. We could have, the most we would ever be able to sell that spread for is $3, right? It's an 82 by 85. It's never going to be more than 3. As it gets to 282, it takes either all the way to now. If tomorrow it's above 285, well then at expiration you would have the ability to sell it for $3 at expiration. At or near expiration, $3. So 282 minus $1.18. Let's see what we got. Let's see what the grand total was. 282 minus 118. $1.64 on 118 equals 139%. Good trade. Or you can get the way PJ went, 73% in 2 days. Bing, bing, in and out. All right, love it. Let's talk about that SPY trade. Okay, what was the thought process? Well, first let's talk about the market. since we started there. Is this all right? I'm sure you probably did a bit of this. Yes, definitely I'll discuss that one. What was the thought process? Anytime you're in a low implied volatility market, which is a trending market, and the volatility's got to be back near like 15 or lower. The lower the better. 12, 13, even better still. But the 15 is the lowest we've seen in a while. I'm looking for a Vega positive strategy, a strategy that benefits from implied volatility being low. Now, the thought process with that trade, I'm going to give myself a little bit extra room here. And I'll tell you. Database is the only way they should be. Press 100%. I agree. 100%. Data decisions are the best decisions. That's the professor doing his work. Anything else is the chimp rattling the cage. Where's my pen? Here it is. What's the thought process in a trend? My thought is it could come on back here like this. Then it comes down and then it pulls back. Let's say it does something like this. And it comes back through here on its way up. Well, if it comes back through here around 12.2, okay? It's gone down, come back up. Never really goes down more than like maybe 585-ish or so, okay? Let's hide this for a second. And let's go into analyze. Let's go SPY. And let's go risk profile. Okay. Now, I said I'd be willing to let this thing even go down towards like 585-ish. Now you can see down here, this is 3 contracts. Down around, I'd say my pain threshold's around 588. I don't really want to see it go below that. But I would be okay if it was in that 586 to 588 range intraday. But at the end of the day, I'd be like, I might need to put something here. Another trade, perhaps. So I have the ability to extend this trade without breaking it. Now, here's the deal. Let's just say it sits where it is. Then tomorrow it sits where it is. I'm down. This is on 3 contracts. I'm down $80. It's nothing. Then I get a day and then another day. And then by the time we get to Monday, it's already back to 60 only. Why? Because time is on my side. So I can just kind of sit on this thing. And if it sits down here a little bit, right now I'm relying on my market posture that when it comes down into this area, it's going to hold support and it's going to bounce. Now, we said it might not be until December the 2nd. It might move around a little bit. And when December 2nd comes, you can see in here, now there's some profits in here. It's not a ton of profits, but there's some profits in here. And what would I have the ability to do? Well, here's the thing. I have January and December. So I have time that I could wait. And if it moved up a little bit, I could roll. And I could sell the 600 and or I could buy back the 600 and then sell 603, and I could roll it a little bit. This trade has flexibility to it. It's not about the market going up or down. It's about just kind of keeping it because we think there's a good chance over the next week or two it stays range bound, and we could close or we could adjust. We have, right? We could, when the time comes, I could adjust this trade into a diagonal trade, which is a more directionally oriented. So if at the end of 2 weeks you look at it and you think this thing's about to explode, we could turn it into a directional trade. If it looks like it's going to stay sideways, we could keep it a non-directional trade. It's flexible. It's fluid. There's not much else I would put on. If anyone remembers, the last few times that we put on calendar spreads, we didn't do anything. Right? We just sat there, waited, boom, took them off, made some money. And that's a lot of times what happens. Now, this one, I went a little longer term. So sometimes I'll just go 2 weeks, 4 weeks, real short, and I get that time decay quickly. Here, I wanted to give myself a little bit more flexibility. So this is ongoing. We'll keep talking about this one. Is it valid now? Yeah. Yeah, you could actually get a better price now. And I'm not worried about the fact that it's down marginally. Hardly anything. Questions about that? Let me know. Okay. So yeah, it's not that I'm like, oh, I'm so neutral on the market. I'm neutral on the market when I see the market up here. If this were to go higher, I could adjust it. If it were to stay sideways, I could sit on it. If it goes lower, I could adjust it. I have a lot of different ways that I can move it. But when it starts in this situation, that's a great starting point right there. Right? Because you can see how many times in that area it goes down and then comes back. Great. I can make money on that. You'll notice it went up a little bit and pulled back. And overall, it really didn't move that much from this point here. Same thing back here. You start it back in this area, it drops, comes back. It's in the same spot. Overall, it's still trending, but in these short periods, it can get stuck in these little ruts where when we look backwards, we're like, look how strong that trend is. But you and I both, all of you and I, all know how it can feel sometimes real time where you're like, what's going on? Why won't this? Yeah. Last night I listened to the calendar spread training. Okay. Tell me if that needs improvement. Can you explain the obvious part that I missed? No, don't assume that. I get that we are playing the theta and Vega. Theta and Vega. You're theta positive, but realistically, your biggest Greek, your biggest variable is Vega. So you look at it and you think, what's most likely to happen? Look where the VIX is. It could go a little lower than it is. It hasn't been this low since July, and even then, it's only a couple points lower. So if the market went up and this thing dropped a little bit, that would actually be something where I would just throw another calendar and I'd write them all out and they would work like magic. So I'm not worried about that. This trade it just gives me the ability to sit and let that. It's hard to get time decay in a low implied volatility market, right? If you go and tried to sell premium, sell covered calls, sell naked puts, right now you would be super frustrated. You'd be thinking there's no meat on the bones of any of these trades. It's thin and lean and paltry. Why? Because implied volatility is low. We know that implied volatility is a direct measure of option premium. High implied volatility, options are expensive. Sell them. Low implied volatility, options are cheap. Buy them. Or if you're trying to get some time decay, what would the thought process be? How can I get time decay, theta positive, while also getting Vega on my side? That's the problem. Because anytime you think of like a naked put, it's Vega negative. We want expensive options. If you look at covered calls, Vega negative. We want expensive options. If you look at iron condors, Vega negative. Butterflies, Vega negative. All of these selling strategies are Vega negative, which means we want the options to start in an expensive situation. We're not in that situation. We're in a situation now where the implied volatility is low. The options are cheap. So if the options are cheap, we can't just be like, oh, I'm going to sell them anyways. What do you mean? Well, then how do I get time decay? You've got to figure out how to get positive theta with positive Vega. Now, let's go look at, here are the Greeks. You can see, and it's not enormous numbers. We have positive theta. It's 15 a day. What is our delta? Neutral. Two. Right? It's a 2. Well, this is sorry. You know what? Let me backtrack. That's in a little bit. Let's go back to today. It's 7 right now. What does that tell us? It tells us the longer we're in, the better this trade works. Right? So we got to be a little patient with something like this. We can roll, we can extend, we can add. We don't have to. If you think we're unwilling to accept defeat with directional trades, we absolutely are unwilling to just capitulate in a trade like this. I can do something down here to make this thing extend. I can definitely do something out here. If it just stays in the middle, nothing I need to worry about. Flexibility right now. Because why? Well, because I'm bullish. And I want bullish trades. But look what the market's doing. We just hit an overextended market. Got a great move up. I'm pretty sure we all made some good money and good trades on this move. Took the money, got out. Now what? Now we said we're waiting for the next run. Right? In a bull market, the exit is the next setup. The second we get out of one trade, we're thinking, oh, okay, something else is coming along here. Now, let's analyze it. So here's our first. This was not even a selling day. It's a red day. This was Monday, right? It was a red day, but it was actually slightly higher than the previous day. So it gapped up, sold off a little bit, and then ended up slightly higher still than the previous day. So, and the volume was lackluster. Then the next day, picked up a little bit. It opened at the same place, so that opened flat, sold off down to here. Buyers pushed it back to here. Average volume, 42.2. We had 43. That's not enough for us to consider it an above average day. Now, here's the next day. We had 43 average, 47, 47.3. So that's 10%. We got into a real serious discussion last week about this. Who do we give it to? I have an S for the sellers. I have a B for the buyers. I have a T for a tie. Who am I going to give that to? I'm going to give that a... Let me have you guys tell me what you think first. Buyers, sellers, or tie? Hopefully you guys still hear me? Oh. Sorry, I'm losing my chat here. There it is. Ty, thank you, press. Agreed. That's nobody. That's not concerning at all. It was a doji. Today you're like, uh-oh. Today we had what? Buyers yesterday? Here you had buyers? It didn't advance. Right? This day it closed at 596.90. Here it closed at 597.19. It closed 30 cents higher. 30 cents higher. Today what happened? Today you'll notice the candle's a selling candle for sure. It opened flat and then it sold off down 0.64. But what happened today? Did not have above average volume. So at this point, we're now 4 days in. This is borderline still flag, right? Still flag, but also still kind of that, like once it gets to day 4, I start thinking, you know what, at this point it's more likely to take a couple of days and then start to turn if it's going to do anything. And that's more of just like a pullback than a flag, quote unquote. I mean, they're really, for the most part, fundamentally the same thing. This is the same signal, right? What's happening here? Buyers made a big move. They had 3 above average volume days. Now they took a break and the sellers have the floor. And what are the sellers doing? So they pushed it up this much and they've pushed it back this much. Forward, back. It's a very mild retracement right there. So if you're a Fibonacci person, that's a bullish retracement there. So what am I thinking here? Am I like, oh, the Fed is going to this or that and this is happening? No. I see exactly what I want to see. This looks great. You'll notice that as of our next scoring, there's going to be 2 selling days, a tie, and 4 buying days, and another tie now. Right? Preponderance is, I mean, we're going to be at a half of a point at least for a while we watch other selling days fall off. We clearly have seen that volume has moved into a breakout type pattern. Great. Let's just expect it's going to hold as of right now. So what am I thinking? I'm thinking trades should be setting up. For tomorrow? Not necessarily. Right? Not necessarily. What do we have going on tomorrow? Mortgage rates closer to 7 after Fed rate. What? Why mortgage rates could be heading to 8% to buy? Oh, come on. There's no way I'm going to buy property. It's only for 2 years, so it doesn't make sense. I don't know. That's frustrating. All right. Come on. Let's get those rates to 5, not to 7. It's redonkulous. What else do we know besides our frustration at mortgage rates? We know that jobless claims were all right. Nothing too concerning there. PPI was fine. Year over year ticked up. I mean, there was a little bit of a tick up. Powell spoke today. We know what he said. Let's go look at our rate tool. Then we'll get to the watch list. I think there's going to be a lot of nice looking setups. I also am going to add, and I'll flag it. I'll flag a post, and I'll link when it's ready, the group watch list with about 25 new symbols. Not all of them are just ready to go. We're just trying them on. See how they feel, how they look. Are they comfortable? Do they match our shoes? We're going to just check it out. Okay, so you can see it's not the foregone conclusion that many had thought at this point. Still better than 50-50. Not quite 1.5 to 1 odds. We don't have a huge group today, but I'm curious. Are you in a they're gonna cut again? Or are you in a they're gonna stand pat? Right? I kind of am moving into the stand pat where they're just going to be like, no, right? We're not going to just cut. This is not political. We're going to, right? I'm kind of leaning that way. What do you guys think? Cut? Are you a Camp A for a quarter point cut with the 60%? Camp B, no change. Give me your thoughts. Let's get to the watch list. pumping the brakes on a definite rate change. Yeah, I mean it's not a definite. They may just be like they may say that and then hit it one more time, and then just like let the first of the year come in and see how things look. Hard to know, you know. I think they already know what they're gonna do. I feel like Powell's doing a better job playing a little closer to the chest. I hate too much Fed transparency that's not actually helpful. Then everyone just tries to constantly just like, yes, I liked Greenspan, who would just sort of be like, he'll say one thing and then yank it and be like, nah, I changed my mind. Greenspan is the original Fed gangsta. Can you please decide how many contracts? So that's a tough one because what you've got to be thinking about is if it comes out here, you might be down a couple hundred and you might put a whole new trade on. And now they both have a couple hundred that they could risk. So you might be 400 at risk. That would be 3 contracts twice. So hopefully that gives you a sense. Like max loss is way out here. It's 7 something, but we're not willing to take max loss. We're going to either adjust it or extend it or close it if we need to. I would say, depending on the situation, like 1 is the best. I would say paper, if you've never done it, do a paper contract. And then do multiples of 3 so you have the ability to reconfigure, close some, hold some. If you're doing it live and you're just like, I would say maybe just do the 1 just to get your feet wet with the strategy. Yeah, that's what I would say. Hopefully that's helpful. I think they'll stay neutral, but I doubt. I mean, yeah, it's tough, right? Like it's always, regardless of what they do, it's easy enough. It's almost like a referee. Someone's going to see it politically. Maybe not so much now with the election a foregone conclusion. Maybe that interpretation has been taken out of it. I guess we'll see. Okay. I keep saying watch list and then I don't go there. This time I'm really going to go. Let's see what looks good. Apple pulled back and starting to try to move again. Apple's an interesting one right there. That's a valid re-entry. That's a higher low. Aflac still in consolidation mode, still waiting. Amazon. I mean, at this point, we're just kind of thinking this thing is pulling back. It could go more. We're not sure. APO. Stochastics is rolling over. It's kind of going sideways. App 11 even is starting to peter out a little bit. None of that. Like, there's nothing that you've missed. But we're wondering, is it going to pull back a little bit more? Now, the futures today are already down a little bit more, down a third. So, yeah, maybe one more day. Maybe we move into next week. And that's where we start to see bullish signals develop. Hard to say. Just because we're bullish doesn't mean we should be expecting to always find bullish trades. You can see we've had 3 straight days of just nothing. BK. Sideways to down. Sideways. Caterpillar was one we said maybe close. It's 2 more days down, but now these 2 are the same. You can see the volumes dropped considerably. Still holding on to a good chunk of this breakout. Still a higher low above this consolidation. CMG looks like it might have more to go. Coherent. I think this looks fantastic. I think this looks great. Look at that volume. Initially, it pulled back and then just dried up. Nothing there. This looks fantastic. So far, I would say, Caterpillar looks strong. Coherent looks strong. Yeah, well, there's some good ones. Cisco's pulling back. I would love to catch Cisco somewhere around 56 to 57. DIA pulling back. Fastenal. We just had a great trade on Fastenal. What are we looking for? A pullback and looking for another trade. All of these I want to go to the well again. I'm thirsty. I want to drink. GBTC. You can see it's pushed up higher, hit a new high, pulling back, way overextended. Way overextended. GE Vernova, love it. Love it. The industrials, it's a leader. It's setting up very strong. Gold is continuing to give it back. Google, I think, is setting up for a nice looking trade as well. Goldman Sachs setting up. Home Depot setting up. A lot of these things, you might think, what? This didn't get to a new high. It doesn't matter to me. There's the so bad. There's the consolidation. Broke out of it. New high, pull back. Anywhere in there. That's my zone. This thing pulls back and turns from in that. Love it. Same thing happened back here. Boom. Pulled up, pulled back. That was a fantastic opportunity. Fantastic. We're looking for the same thing to happen. A lot of those, right? A lot of those across growth sectors. Financials, industrials, technology, consumer cyclical, financials. There's a financial. Boom. It's pulling back. Looking great. IBM, maybe. Probably not. Small caps look strong. They're pulling back, but not really selling off hugely. None of this is concerning if you are looking at it in a bullish perspective. Look at all these mild pullbacks after strong moves forward. You guys know we love KKR. We're looking for another KKR trade. Another one. Where are we looking for? Anywhere in this range. Whoops. A lot of good setups. Probably not tomorrow. Early next week. MasterCard looks great. New high. Pulling back. Setting up. McDonald's. Maybe a sneaky reversal. Sitting on top of the 50. As the world prepares for the McRib to come smashing back onto the scene in glory. Don't call it a comeback. It's been here for years. Meta. I like Google better, but Meta's pretty strong. Morgan Stanley, a little overextended, but not as... I think there's others that are more in line with the trade. Microsoft doesn't look all that appealing. MicroStrategy pulling back. We'll see, right? Yeah. Netflix just keeps on going. Nvidia earnings are coming up. That's okay. PLTR. It won't be till like maybe Tuesday or Wednesday of next week. I had a conversation with PLTR when I was asleep. PLTR personified came to me in my dreams. We had a conversation. First said thank you for the bounty of trades recently. Feel like we're connected. I said, what's coming up? He said, be ready. So, I didn't even look at the messages for a while. Everyone's probably like, what are you talking about? Nope. You guys are just listening to me yammer on tonight. No one even gave me a reference about my LL Cool J lyrics. Come on, you guys. I pulled out LL Cool J lyrics. Someone has to say something about that. PayPal. Pulling back. I mean, everything looks good for a setup. Everything here. Qs look good for a setup. Not utilities, though. It appears that utilities have become defensive again, maybe, right? Like the whole, like, oh, everything is so crazy for growth. SoFi. Yeah, pulling back. SP. We'll get there in a minute, but we're going to go look at the VIX. I think it could have one more leg up. If you're a Elliott Wave person, you might think one more leg is still coming on Tesla. TSM. I would trade a bounce off the 50. TTD. I would trade coming out of this, even though the earnings had some weird volatility. I would trade a higher low for sure. Oh, this is scary right here. Like we were like, this is scary when it got here, and we said, this is higher than it was back here when we were like, that's going to put some pressure on the market. And then this eased off, and we're like, okay, not bad. And then it's like, whoop, whoop. That's going to be hard. That's going to definitely, we'll see what happens, but that's going to be hard for the market to sustain. The VIX, just kind of sitting down. Just still sitting down, 14. But does it look like it's getting ready to turn? It sure does. Okay, so let's see what happens, right? And remember that will help in a calendar spread. Walmart, if you missed it earlier, took a huge chunk on that. Done. Now what? Waiting for earnings, waiting for the next trade. Real quickly now, materials are down. Consumer communication services is up. Energy up. We'll see. Financials up. Industrials up. Looking strong. Looking strong. Looking less strong. Looking less strong. Those are our defensive staples. Utilities. Healthcare. None of that looks good. Where's all the money going? Into the growth sectors. That's bullish. All of this looks bullish. I mean, as we look at it, I mean, it's probably going to stay the same, actually. I don't think that's going to get an extra quarter point. It's hard for that to get to 1. This one is kind of stuck. Volume. Yeah, no, I think it'll stay the same, but that'll be the second week in a row to 6.25. Even though the market just kind of went sideways. We stayed at 6.25. That's actually quite bullish. Last thing, make sure you're getting your record keeping and your analytics done. I think I might have confused myself and said we were on 6 and then on 7 and back on 6. So record keeping and analytics, that's what we're working on. Once you have those two sections in place, you can move on to the goals. We got tomorrow. Glenn will be here in the morning. I'll be here in the afternoon. And then on Sunday, I'm gonna go on Circle, and then I'm just gonna put a link, and I'm just gonna say I'm gonna try to sweep people over. Anyone who's active in both communities, you could kind of help out and just be like, hey, we're moving over. It's amazing. Come over and be in the party. It's a party. Thoughts, questions, concerns? Anything we didn't talk about that we need to? Did Stephen D say who is LL Cool J? Who is Ladies Love Cool J? I'm assuming you don't listen to rap. But if you did, especially in the 90s, then you know who he is. But he came out with a great song with Eminem. I'm a big fan of Eminem's as well. You should listen to it. Steven, I want you to YouTube LL Cool J Eminem. They did a new song. I want you to listen to it, and then I want you to come back and tell me what you thought about it. They're old too, right? Like, they're both in their 50s. It's all right. They can still rap. And we can all still enjoy it. It'll be fantastic. I'm assuming we hit all the questions. I appreciate everybody's patience in the audio issues that we had and making it here. We're gonna make this transition. Circle will be our new home. Circle will be amazing. There's more coming, I promise. Glenn will see you in the morning. He got his audio working, so I think he got it sorted. I'll see you tomorrow afternoon. Have a great rest of your night. As always, happy trading.